Welcome back, folks. Greg Silverman here, Chief Investment Officer. Another session of Come Learn with me. So we take a look at all the articles that we curate over the week and which ones you all like. And, well, not surprised that this one comes up. Trump's IRS auditors turn up heat on wealthy taxpayers. Obviously, this has been squarely in the news. So let's read this article, and then if you stick with me, I'll give you a few more links and whatnot to follow to find out more about what we do. IRS auditors turn up heat on wealthy taxpayers. Federal audit rates for the wealthy dropped over most of the past decade, but that is now changing as the IRS, buttressed by a Biden administration that has made tax enforcement a priority, has pledged to increase scrutiny of high net worth taxpayers. For all individual taxpayers, the average audit rate fell from 0.9% in 2010 to 0.25% in 2019, or by 72%. The Government Accountability Office said in a recent report, taxpayers with income of 5 million or more were the most likely to be audited throughout the decade, though still saw their audit rate drops by 86%. But in a recent report, the IRS said audit rates for incomes between 100,000 and 500,000 have risen to 0.6% this year, doubling from 2019. The agency said audits for taxpayers making more than 10 million annually quadrupled to 8%. And wow, 8%, that's quite high. And audit rates for the million to 5 million category more than doubled to 1.3%. Still very low. I mean, if you think about it in context, right? That may only be the start. The Inflation Reduction Act of 2022, a legislative proposal currently being pushed forward by majority Democrats in the Senate, which has now been passed, includes $45.6 billion for enhanced IRS enforcement, part of an $80 billion increase for the agency overall, and a billionaire's minimum income tax that would require taxpayers worth more than 100 million to pay a minimum of 20% on their capital gains tax. I think that ended up being corporations with more than 15%, being a 15% tax. But anyway, we get the gist of it. The legislation will also do away with pass-through tax deductions that have shielded investment managers from taxes. So they're talking about the tax carry rules, and that was also not touched in the final legislation. The IRS is increasing focus on non-compliant, high-income and high-wealth taxpayers, business partnerships, and large corporations that make up a disproportionate share of unpaid taxes. The agency's new 5-year plan promises. The IRS periodically announces special initiatives targeting high-net-worth individuals, but wealthy clients are often in the crosshairs of the IRS because of the complexity of their financial lives, said James G. McGrory, a partner with Armanino LLP in Philadelphia. David A. Schuster, managing partner and director of tax controversy services at Friedman LLP's New York office, said that as confirmed recently by the IRS commissioner, audit rate statistics can be misleading. There's a greater lag after a high-income taxpayer files a return and when that return gets picked up for audit, compared with when low-income taxpayer returns get picked up for audit, or other questioning, such as for the EITC, Earned Income Tax Credit, which is generally questioned immediately, if at all. Wealthy clients who hold foreign assets, such as bank accounts, foreign trusts, and foreign business interests, are especially at risk. Penalties for not filing foreign information returns are severe. Wealthy individuals who own affiliated business entities, partnerships, and S and C corps, and who perhaps have significant intercompany activity may also be at risk, McGrory said. Other trouble areas include sole proprietorship and pass-through entities, gift tax returns and private foundations, and the interactions that the high net worth individual has with them. Seems like charitable contribution deductions, especially for conservation easements, are susceptible to higher audit probabilities, Schuster said. That's been the case for a while. All right, page 2. Audits of taxable states are also on the rise and can have significant impact to the state and its heirs, added David Levy, Senior Managing Director at CBIZ MHM, based in Minneapolis. Discounts for closely held businesses and other investments should be supported by quality appraisals that take into account both the asset being appraised as well as any limitations or other factors relevant about the ownership structure of the asset. The IRS generally audits back 3 years, but could audit up to 6 years or longer. Behaviors that can lengthen the statute of limitations on the IRS audit include underreporting income, overstating basis in an investment or asset, omitting foreign income, gifts and assets, or filing a fraudulent return or not filing a return at all. Audits of high-income taxpayers can occur closer to the end of the statute of limitations, Levy said. Audits can take several formats, said Jim Bradenberg, a Milwaukee-based tax partner at the professional services firm Sikich. Some are correspondence-type audits where the IRS may look at certain aspects of a taxpayer's income tax return. In other cases, the taxpayer will encounter an audit where they will need to visit a local IRS office for a tax audit. Bradenberg said, adding that a taxpayer's advisors may accompany them to such meetings. Be prepared right from the start when you take a tax position, advisor said. Even if the position is aggressive, having your justification when filing is significantly better than trying to put together documentation and support under the pressure of an exam, Levy said. Okay. Yeah, just fraught with fear, isn't it? I mean, people, the news, the media just really plays up the fear aspect of this, but I guess it is scary. So I hope you enjoyed that one, or not, as it were. Take a look at some of the links below. We do outsource CIO work, Chief Investment Officer work. We do outsource Chief Financial Officer work. We've got some great talented folks that we work with. We can help you with taxes, tax planning, hey. And then also we follow a number of niche investment themes. One we've been following for a while actually is battery metals, or the metals that go into the manufacturing of batteries. And with the Inflation Reduction Act, that seems to be a real hot item now, renewable energy and electric vehicles. So take a look at some of our LinkedIn mini groups. Greg Silverman, out for now.